Hi there, and welcome to InsideTracks.co.uk, the website and social media channels that try to help you to trade smarter. We've seen a lot of adverts out from Betfair talking about trading Betfair, and there'll be a few of you who are going, "What is Betfair, and how can I make money from trading it?" So this short video will just be an introductory one to explain some of the basics on Betfair. If you like it, obviously subscribe and like. If you want to leave a comment so we can get better, please do. That's fine. So let's just move straight in there with the next one down. So we press that. So trading Betfair, what is Betfair and how can I make money? So this is just a simple Betfair chart. And I'll just explain a few things off it if I can, so that you know what is what. So this is really where we deal from. This is what they call the interface, and at any one time there's a blue and a red square. One is saying this is what you can back this horse Rock Sound at. So there's £180 on offer to anyone who wants to back Rock Sound at 2.38, and then there is 2.4. There's £35 for those who want to lay Rock Sound. Now, some of you are going to say, "Well, what is a lay bet?" Probably everybody understands a back bet. That means I want to support this Rock Sound. I think it's going to win, and you're going to give me 2.3. 2.0 is equivalent to evens, so it's just slightly above evens. So if I bet £10, I'll get £10 and a bit back in profit. Laying a horse is like you being a bookmaker. It means that you can say, "I think actually Rock Sound is going to lose, and therefore I'm prepared to accept a bet from you, say £10 again, and if you want to bet that £10 with me, as if I'm a bookmaker on the course, if the horse loses, I keep your £10. So bookmaker will not pay you if the horse loses, but the bookmaker will have to pay you if the horse wins. So your liability on a lay bet is therefore the same as a bookmaker would. Now 2.4 is, let's say that was 2.5. 2.5 is 6 to 4. That means that if you wanted to lay this horse at £10, you'd be paying whoever's on the other side of the bet, whoever's backed it at that, so £15. So your liability is higher. With a back bet, your liability is your stake. So if you bet £10 here, if you lose your £10. However, if you're going to be the bookmaker, you're taking £10. That's what you're going to win, but your liability is obviously the amount that the person is going to win, which is close to £15. Now, because you can act as the punter and as the bookmaker, that gives you a real big option, because with most bookmakers, they only accept, well, in fact, virtually every other bookmaker only accepts back bets, i.e. they'll stand there and they'll say, "Here you go, here's 2 to 1 or 3 to 1 or 4 to 1, whatever it happens to be, all these prices down here, it'll offer you," and that's why they're called bookmakers. They make a book, so they take bets on all the different horses. So they take all the different bets through here, and when this one wins, all the bets they've taken on these other horses pay for paying out the liability they have on this horse, and there's a bit of a profit for them in it, and there's never a loss, because bookmakers don't make a loss. So they only take back bets, and often therefore the prices they're liable to give you as a punter, because they want to take a profit, are going to be not so great. Well, Betfair's come in and said, actually, we're prepared to match people up. So here's someone who wants to back a horse, here's someone who wants to lay a horse. They'll make a deal somewhere in between, and at the end of the day, we'll just take a commission. We'll just take 5% of anybody's winnings. So that's how they make their money. So generally speaking, Betfair offers better odds than a bookmaker, because Betfair is acting like an exchange and taking money on every transaction that goes on, whereas bookmakers are trying to make money on a horse race based around how they can spread the money out and how miserable they can be with their odds, so that ultimately they will make more money than they have to pay out on any one horse winning. That's how it works. So you can back and lay a horse. So what is it then you're trying to do to make money? How do you make money? Well, if I just take a simple example, is I'm going to back. I say buy, and we're talking about Betfair exchanges, rather like the stock market. It works in a very similar way. What you're trying to do is you're trying to back a horse at, say, a certain odds. I'm saying 3.0. And by the way, let's be clear, 2.0 is evens, 3.0 is 2 to 1, 4.0 is 3 to 1, etc. So that's just the way the odds are. Betfair puts the amount you win, which is, if you put money on 3 to 1, you win £30, three times your stake. But then you get your stake back, so it's £40 returned. So they tend to put it as 4.0. So if I'm backing at 3.0, my liability, if it's a back bet, is that I will lose my £10. When I'll lose my £10, that's my liability. The returns I get are 3 times the 10, 30, but my profit is 2 to 1, which is that's what makes my profit. So £20 profit. Yeah, but £10 bet on a 2 to 1 horse, it's £20 profit and my stake back. If I did exactly the opposite, I've acted like the bookmaker, yeah, and I'm doing the lay bet, so selling this horse off and saying, anybody want to lay this horse? I put £10 a stake on at 3.0. My liability, right, what I'm going to lose if this horse wins, what I'm going to lose is £20, because I've got to pay out the punter who put it on at 3.0. I've got to pay him his winnings. So my liability is higher in this situation where I'm doing lay bet at £20. My returns are £20 because I'm staking £10. That's what I'm saying. I'm staking and I'm laying at £10. A £10 bet a lay is what. So your stake is your profit. So what you see is that in any one bet where a bookmaker, if it was absolute evens, there's no money being made in between. Somebody who backs it at £10, their liability is £10. That liability, if they lose, that goes to the bookmaker. Yes, his profit is £10 if you lose. However, if the horse wins, you win £20 profit, and the bookmaker, his liability is £20. So these two match. Yeah. So what you're trying to do is you're trying to back the horse at high odds, yes, and then lay it at lower odds. Yeah. So if I could back a horse at £10, yeah, so I backed it on Betfair Exchange at £10, and suddenly it becomes all the rage, and everybody's backing it, and the odds come down and down and down to 2.0. Then I could lay off my stake, yeah, £10. My liability is only £10, and therefore the liability that I have of if the horse wins, my lay bet liability is £10. But actually, I've still got this bet up here at £20. So those two don't match anymore. I'm going to win £20 if it wins, and I'm only going to lose £10 if it loses. So in fact, I'm £10 up on the deal. I've basically got, if I do the two bets together, yeah, so I back it at 3.0 and I lay it at 2.0, £10, then I have £10 left over in profit that will be mine if the horse wins. Okay, if the horse wins. Now, you'd say, okay, fine. So how do I now make money no matter what happens? So I've got £10. Just say in this situation, I've managed to back it at 3.0. I've got £20 profit there. I've then laid it off. My £10 liability is now laid off at 2.0. So I've got a £10 liability here. So ultimately, what I want to do is actually I want to what they call green up. So what I've got is a £10 profit here that I can now green up. So what I can do then is I can say, actually, I'm going to take that £10 and I'm going to spread it. I'm going to put five on it at 2.0 and 5 against it at 2.0, and now I make £5. No matter what happens, I'll make £5. So that's what you can do. You can green up. You can actually take the differential you've made between your back and your lay bet, and you can green up. It's called greening up because it means that if you do it right, every single outcome of an event then becomes a profit for you, because you've taken the profit you're going to make in your back bet and you then put it across all the different horses, so that no matter what happens, you will win money. And that's you can do that by using a cash out button. You can do it by doing it manually, but often most people do it by clicking what's called a cash out button. So to make money, you need to back at high odds and lay at low odds. This is the equivalent in the stock market of buying low and selling high. It's exactly the same. You can obviously do it the other way around. You can not like the look of a horse, think it's going to go completely opposite way, and you can lay it at 2.0. Hopefully it will drift out to 3.0, then you can back it at 3.0 and get exactly the same outcome. All you're looking to do is to have a differential between your back bet, which should be higher than your lay bet. Yeah? Okay. So what we're looking for is price movement, aren't we? That's exactly what we're looking for. We're looking for price movement either in or out. Generally speaking, most people go for in because the back bet has less liability than a lay bet. But you know, some people like to do lay bets and then look for the horse to drift and then back it at a higher odds and then take their profit that way. So a horse's price will move for lots of reasons. So let's look at what those reasons could be. Well, perceived value. So if we take a heads and a tails coin, and it's a perfectly good coin, there's no sort of bias to it, and we toss it up in the air. Now we know, and you know, that the first coin toss, everybody will say it's a 50-50 chance. Yeah, it's a 50-50 chance. Therefore, if you had no bookmakers to pay their profit, you would get even money heads, even money tails, assuming it's not going to land on its edge. So even money is what we would say is the value of that bet. If you get somebody said to you, I'll offer you 2-to-1 for heads, either you'd think the coin was rigged or you'd think he was mad, because at 2-to-1 you're always going to win money over the long term, because if it comes up heads and tails exactly the same number of times as it should, you'll get 2-to-1 every time it comes up heads, and that's fine. You'll make money because you'll make 2-to-1 as opposed to even money. So, however, when you toss this coin 10 times and it's come up tails 9 out of the 10 times, even though you know that the 11th time you toss this coin, it's still 50-50. You'll be saying to yourself, hold on a minute, 9 times out of 10 it came up tails. I think I'm going to back tails more. And actually, strangely enough, this does happen, and you can actually find people who are prepared to give you better odds than evens for a coin toss if that happens, which is bizarre, because it's always going to be 50-50. It's always going to be evens, no matter what's happened in the past. So, but you could perceive the value, and someone will think it's jinxed or it's weighted or whatever. If we're absolutely certain it isn't, and it's absolutely a perfectly normal coin and hasn't been mucked about with, then every single time it's tossed, it will be even money, heads or tails, and it doesn't matter really what's happened before. That's that. So Actually, that's where I come to next. Is past performance. Past performance is generally an indicator of what is going to happen in the future. So, generally speaking, if you have had Usain Bolt race against Tyrone Williams 10 times, and he's won that 100 meters 8 out of 10 times, then the next time Usain Bolt runs against Tyrone Williams, you will expect the price and the odds to be going down in Usain Bolt's favour, because generally speaking, that past performance it should be a strong indicator, unless there's something going on and you need to look out for that. But past performance is a strong indicator of what should happen in the future. That's why people study form, and the people who study form and look at past performance often will bet in the right way, and a horse's price will move as a result. Now, the third reason why a horse's price can move is change of circumstances. Something happens, and that's why it's always useful when you're trading to be watching the live feed that comes from Betfair, because if a horse unseats its jockey and runs a furlong down the track and is caught and put back, that's a definite change in circumstance. This horse now has run a furlong more than the other horses involved. So basically, that change in circumstance will make the price of that horse go out, and quite rightly so. Other things can happen. All sorts of things can happen that would make you feel either short term or before the race, like a jockey change, for instance. Jockey changes can be positive and negative. You get a very good jockey replaced by an apprentice, you would absolutely not see the same value, and that can happen between races, for instance. So if a very, very good jockey rode the horse last time and just got it to win, and this time it's coming out, and we've now got a very inexperienced jockey on its back, and the horse it beat by a very short distance, it's got the same jockey on its back, you would say actually it's not necessarily going to lead to the same result. In fact, it's very likely not to. So there are circumstances that change either minute by minute, or between races, or whatever it is. Obviously, prices move due to inside information, and unlike stocks and shares, where people can get prosecuted for inside information, although trainers and jockeys aren't supposed to gamble, we know very well that there is that goes on in the game, and there are certain outlets where information comes out. Stable lads talk to their contacts who put on bets for them. They put on bets themselves. You have also professionals who stand and watch horses on the gallops. You could call that inside information, because they see much more than you and I do. So this inside information can often come through onto the betting ring, and you'll see horses either going in sharply, which is called a steamer, or the jolly. You can often hear those terms being used, and that means that connections, people who own it, people who train it, people who know about it, have ridden it out, who watched it on the gallops, all think it's a good thing, and you'll see that horse's price go in sharply, or they'll know something that you don't know, like the horse isn't as fit as you think it might be or should be, or it has to race in this race because there aren't any other races for it to race in, or whatever happens to be. That could be negative inside information, which then would lead to a horse's price drifting quite radically. So inside information has a way of getting into the market. Generally speaking, that information can happen either in a relatively small way during the morning, where that I tend to think is the stable jockeys and so on getting on with their £10, their £15, their £20, or the professionals come into the market the last 5-10 minutes before the race, and a lot of money comes in, as that information is being leaked into the market, and you'll see a horse who's been fairly stable or even drifting suddenly shorten, or a horse that's been shortening slightly during the morning suddenly shorten a lot more. You'll see it happen in front of you, and it's worth understanding that that money often knows better than anybody else. And then there's sentiment or herd mentality. There's a there's a feeling that this jockey is going to retire. This is his last race, or that kind of sentiment, or herd mentality. You know, the sentiment that is, and we just been talking about it. A favourite looks good, so everybody's backing the favourite, and then it starts going in, and suddenly the herd mentality is leading to everybody going on that favourite because there's nothing else that looks really decent, and suddenly you find that the herd mentality has made the price go far too far, but it does move the price, and herd mentality is fine so long as you realise that you need to get in and out before the herd goes the other way and you're left in the lurch. So all sorts of reasons why prices move, and these leads to possible strategies. What are you going to do in your trading, and how are you going to take advantage of these price moves? Well, some people like to go for something called scalping. It's a term used for taking small profits multiple times from small market movements. So you take a horse, it's trading at it'll offer you back odds of 2.38 and lay odds of 2.4. So you say, okay, I'm going to put some money on 2.4 to back and 2.38 to lay, and at a certain point someone will take your 2.38 and someone will take your 2.4, and you'll make a 0.2 margin profit, and you'll do that with fairly small amounts of money multiple times, and basically you just take little tiny pieces of profit, and generally speaking people scalp with the thought, with a bigger prospect that they think this horse's price should move in a certain direction, so they tend to scalp in that way. So if they think it's going to shorten, they'll put their back bet on first and then look to lay it, then back bet lay, back bet lay. If you think it's going to drift, then you do a lay bet back, lay bet back, so you don't get left on the wrong side. Other times you scalp is when you clearly see a horse is trading in a certain corridor that is called a corridor because money comes for a horse when it gets to a good value, and then money is laid against it when it becomes bad value. So let's take the tossing of a coin. If enough money comes to push a horse, so that there's more demand for that heads than there is for tails, then heads price will shorten. But of course, it can't shorten much less than evens because it is an even money bet. So if it goes down to 4 to 5, which is less than evens, then obviously money's going to come for tails, because tails will be higher than evens. So then money will come for tails, and then it'll come back to evens, and then the money for tails will be too much, and it'll send tails too low, and then there'll be money comes for heads, and so on. So you'll see horses trading in a corridor, and what you need to do is, obviously, in scalping, you're looking to say, okay, great, heads is now 5 to 4, which is a great price, so I'm going to back it, and so you do, and the price then goes into evens and then overshoots to 4 to 5. So, oh great, it's 4 to 5, so I'm going to lay it, and then you're laying it and somebody else is backing it, so it goes back out and goes back out, and so you actually just take your little bit of profit each time it does that, so that it's called scalping basically, and you can use trading software to help you to scalp. You follow the money, and we've talked about this just briefly. If a horse's price moves in or out significantly, you follow the trend, and that's because that money often is people who know what's going on. They're called steamers and drifters, but the issue with following the money is that those people who actually know what they're doing and are in the know and have the inside knowledge are the first in and the first, but they're also the first out. So just be aware, you follow the money and suddenly the money goes the other way and you wind up in the lurch. Back to lay is a very popular strategy for backing horses. So if you can predict that there's going to be a change of circumstance for that horse, like it's going to lead, for instance, then if that horse does after the off wind up in the lead and perhaps be keeping in the lead until the final 2 or 1 furlong, then its price is likely to shorten quite radically. It works for horses who lead. Why? Because if your horse is in the rear and only comes in the last half furlong to win it, then it's only in the last half furlong that you'll see the horse's price radically decline. If your horse is leading, and particularly if it gets a decent lead or what's called a soft lead, then it can actually shorten quite a lot and still not win, and you'll still get paid. So back to lay is quite a good strategy for people, because if you can predict a circumstance where the horse his price is going to shorten, and that's because it's it's led in the past, it's from a good draw, it's on the right a course that it likes, whatever you want to take, the information you take, and you say, right, great, all the circumstances are right for this horse to be leading, and then obviously when the horse does lead and stays in the lead for instance for a little while, then the price can shorten quite radically, and often back to lay propositions can pay better than backing a winner. And then lay strategies, obviously, you are allowed to lay horses, and we've talked about this. Sometimes the market is behaving like a herd. A favourite, for instance, is the best horse in the race, but it's still a nag. Still got 3.5 legs. It's not the best horse in the world, and it goes very low in odds because there's no one else to back, and so everybody's backing it. You could turn around and go, well, actually, this is undeserved. This horse, is just about the best in this race, but it's still a bloody nag, and I wouldn't trust it as far as I could throw it. And because it's the best in this race, it doesn't mean to say that it should be odds on. It says that it should be, still should be 3 to 1, because it's very unreliable, and it's only run 2 good races out of the last 38 it's run or whatever. So yeah, you have to use your inside knowledge and your understanding of racing to say, oh God, no, this is a class 6. They're all nags. This is the best nag of the lot, but it doesn't deserve to be 4 to 5 favourite. So you want to lay it, and often then lay strategies will lead to exactly the opposite to back to lays. You either lay it and stay and keep it laid and look for the profit, or you can lay it and then in running where you see it not running as well as it should, then put a back bet on to cover your liability, and then you can make money and green up. So all these strategies, they're the main ones. There are lots of other strategies that people use. Anti-post strategies where you bet long time in front of the race and look for the price to shorten, and then you can make money on that. You can make money on all sorts of different things in terms of strategies for racing, but these are probably the main ones and the easiest ones really for any beginners to try. So next, what we're going to do is we're going to have a quick look at this all in action, and I'll show you a live betting arena. So here we go. We can see the screen, and we can see the Betfair streaming live, and ultimately on this particular screen, you can see all sorts of stuff that's useful. You can see the actual prices being offered by bookmakers. So you can see actually you're getting a quite considerably better price than the bookmakers would give you. I mean, For instance, Rainbow is 5 to 1. It's given 4 to 1 there. Primo Bacchio is 11 to 8. We're getting 6 to 4 now. Nearly 7 to 4 on that on Betfair. So you can see that you get better prices on Betfair. We get obviously the stream through. This is live, so it's not delayed by any time. Often, if you're watching it on the television like ITV, there's up to a 10-second delay. That can catch some people out when they start trading. They think they're trading on ITV, and suddenly they realise that why has the price changed so much? I don't realise that I'm 8 seconds behind everybody else. So you're actually betting on something that's 8 seconds behind, which is a bit crazy. It doesn't happen very often to you, and it doesn't need to happen very often for you to stop doing that. That's for sure. So yeah, you get the live streaming on. I tend to put that up on the right hand side of my screen, or on a different computer, so that I've got full access to the actual Betfair account. So I can, if I'm using software, I can use that without having to make it too small. I'll stop sharing now. I'm going to show you the what happens in running to your Betfair account. Okay, we're a few minutes away. They're just about to finish loading. See that they're all drifting. All these horses are drifting. That's gone from 4s to these 6s. That's gone from 2.4 to 2.6. That's gone from 5s. We're seeing actually there's a decent amount of money coming in late for this particular horse. Yeah, you can see money's coming in for that horse. So there's there's some interesting money coming in for Shining Success, but still the favorite is Prima Bacchio. They're off, and you can see them running now, and you can see that Prima Bacchio is not really broken very well. Prima Bacchio is up with it though. He's third, which isn't too bad. It's okay. I can't see that being a major issue. So yeah, he's come back in again. The first thoughts were he wasn't doing very well. Now actually, I think he's quite well placed. Third on the rail. I think he's quite well placed third on the rail. Going quite well. So his price is coming in. And then what we're seeing is that yep, he's coming to the outside now to challenge. We've got someone on the outside coming around the houses, and yeah, he's coming quite nicely here. You can see his price should drop fairly quickly. There's someone coming up on the outside here. I think he's gonna get taken maybe. I think he's gonna hold on. Don't know. No, he's not gonna hold on. Is he? Oh, no, he's not gonna hold on. So Shining Success, where we saw that that large amount of money coming in right at the end. The last 5 minutes, professional money. As you can see, Shining Success wasn't really fancied. 8-6. It was on come 8th and 6th in its first 2 runs, but then the money came. Big money came in the last 5 minutes. So gave you all the warning, and I said it before it went off. There you go. It's got more than we think. There it is. Nice big horse. I thought this one was going to keep going. Generally speaking, at Chelmsford, it's quite difficult to pass. So actually, that's a very good run. Very nice run. Just managed to get past, but it did. Yep. So that's really shows you, I mean, as much as I can, what happens in these different races. Sorry, what happens with Betfair? What happens during the lead up to it? When you start seeing a horse drift, particularly in the last 5 minutes, that tells you quite strongly that there's not much confidence behind it. You see it coming in a lot in the last 5 minutes, and you know that there's someone new. Well, quite a few people knew, in fact, professional money knew that this horse had a much better chance than its sort of 8-1 or where it was, and so they've all backed it, and it's coming at 11-2. Some very nice money indeed was made on that horse. So guys, trading the Betfair. What is Betfair? How can I make money? I think I've told you both. I've given you some strategies. I've told you what to look for. There are lots of other videos on our YouTube channel. If you like what you heard today, subscribe and like. If you've got some comments, please let me know. There'll be other YouTube videos on all sorts. I do one on back delays as a speciality, how to pick a back delay horse, etc. They're all on the YouTube site, so there's plenty there for you. If you are trading, keep within your limits. Don't go mad. Bet with very small stakes to start with. Get yourself into it. Ease yourself in gradually. It'll take you 3 to 6 months to get used to it. So don't go mad when you first start, because you can lose, particularly if you're laying horses, which is a dangerous game. Then you can lose lots of money quite quickly. Don't do that. Get yourself used to what you're doing. Sign up to the newsletter. It's free at insidetracks.co.uk, and I'll give you some steer as well. Okay.